These crypto founders and Bitcoin moguls lost $116 billion in 2022. The embattled cryptocurrency industry and its wealthy pioneers face a moment of reckoning after the collapse of crypto exchange FTX and hedge fund Alameda Research. His Bahamas-based FTX had just raised $400 million from prominent venture capitalists at a $32 billion valuation. A few weeks later, when Forbes published its annual World's Billionaires list, SBF, as he's known, was crypto's second wealthiest person, worth $24 billion. As a result, 17 of crypto's wealthiest investors and founders have collectively lost an estimated $116 billion in personal wealth since March, according to Forbes estimates. We're now at the breaking point in crypto where everyone will have to take a pause and say, okay, we've seen a ton of economic wealth destroyed in the last couple of months, we need to start taking this seriously, says Matt Cohen, founder of Ripple Ventures, a venture capital firm. The man with the most to lose is Changpeng Zhao, CEO of Binance, crypto's largest exchange, a sprawling global network of murky subsidiaries. CZ helped set FTX's demise in motion on November 6 when he tweeted that Binance would sell its remaining FTT, the native cryptocurrency of FTX. CZ also faces increased skepticism of centralized exchanges, particularly Binance, and ongoing investigations of him and his company by authorities in Europe and the United States over allegations of facilitating money laundering and other financial crimes. Mazars has since paused its work with crypto companies, adding to the uncertainty around Binance's finances and the exchange's future. I don't believe a business can persist, operating in this amorphous way, not governed by anyone or anywhere, especially when it's run by a public individual, says Lisa Ellis, an equity analyst at MoffettNathanson, a division of SVB Securities. CZ stated in a webinar on December 23 that Binance has zero liabilities. "We are quite a unique organization, we don't have loans from many other organizations," he said. Barry Silbert, head of crypto conglomerate Digital Currency Group, is at the heart of crypto's market contagion. To stay afloat, Silbert will likely have to raise outside capital or dismantle his DCG crypto empire, which includes some 200 investments in crypto firms and tokens, including crypto news site CoinDesk, Bitcoin mining firm Foundry and Grayscale Investments, an asset management business that offers shares in a publicly traded Bitcoin trust. Forbes estimates the value of DCG's outstanding liabilities are greater than the fair market value of its assets in the current market environment. DCG may also struggle to offload illiquid bets. For these reasons, Forbes estimates the current value of Silbert's 40% stake in DCG to be approximately $0. But those losses don't disappear, says Ram Ahluwalia, CEO of crypto-focused Lumida Wealth Management, who points out that Genesis creditors will have claims on DCG assets even if Genesis declares bankruptcy. Gemini, the twins' privately held crypto exchange, offered their users returns as high as 8% during the bull market through their Gemini Earn product, which outsourced the loan making to Genesis. Now Gemini customers are owed some $900 million by Genesis. For Brian Armstrong, who is the CEO of publicly traded exchange Coinbase, FTX's collapse presented an opportunity to strike. On November 8, in the chaotic hours after Binance announced its tentative takeover of FTX, Armstrong trumpeted his vision for crypto while dissing Binance's Zhao. His crypto venture firm Paradigm invested $278 million in FTX equity. Matt Wang, Airsam's partner at Paradigm, said on Twitter, "We feel deep regret for having invested in a founder and company who ultimately did not align with crypto's values and who have done enormous damage to the ecosystem," adding that Paradigm's equity investment in FTX "We feel deep regret for having invested in a founder and company who ultimately did not align with crypto's values and who have done enormous damage to the ecosystem," and that Paradigm had never entrusted FTX to hold any of its digital asset investments. Private crypto firms that raised capital in 2021 or earlier this year at high valuations are being traded at significant markdowns on secondary markets and in over-the-counter deals, says Matt Cohen of Ripple Ventures, who expects to see larger markdowns for the fourth quarter as companies prepare year-end investor reports. Daily trading volumes on OpenSea's NFT exchange have been under $10 million in the last month, compared to over $200 million back in January, according to crypto site DappRadar. According to Viswanathan, FTX's collapse hurts the consumer perception of the crypto space. Chris Larsen, Ripple's other founder and its chairman, has lost over $2 billion this year, due to XRP's declining price and Forbes' estimated discount on Ripple's equity valuation. Ripple, which last raised capital in 2019 at a $10 billion valuation, bought back shares from an investor last year at an inflated $15 billion valuation after that investor had sued Ripple in connection with a Securities and Exchange Commission lawsuit filed against Ripple in December 2020. That case is still working its way through courts. Tim Draper, a venture capitalist who holds around 30,000 bitcoins, dropped from the billionaire ranks earlier this year, when Bitcoin hit $33,000.